Good morning, traders. It is 8 a.m. Chicago time on Tuesday, the 15th of September, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Mixed bag overnight. European markets, currencies, treasuries, all flat. Crude oil is up. Germany's September ZOO Current Situation Survey registers its third largest month-on-month improvement at 67.5 versus 64.0, looking very positive there. China continues to be a drag on the markets as investors lose confidence in the Chinese government's ability to stimulate growth. Um, and then just a half hour ago, we got August advanced retail sales 0.2 versus 0.3%, slight miss. Retail sales ex auto came in at 0.1 versus 0.2%. Looking ahead at today, we're getting industrial production in about 15 minutes, 14 minutes expecting negative zero point 0.2. The same time we're getting capacity utilization expecting 77.8, and then business inventories at 9 o'clock Central. Business inventories expected at 0.1%, and other than that, not seeing much as far as speakers and so on. Again, we'll look at the charts here in a second, but I want to remind you that we are trading. The front month is December in U.S. equities and treasuries, as well as European treasuries. European equities will switch early U.S. morning on Friday. Make sure you're out of the September contract if you're trading DAX, Euro stocks, and those products. I think it switches at 6 a.m. Chicago time. And then this week we have a couple of big ones. We have the FOMC meeting and decision, as well as the press conference on Thursday, and we have quad witching. So as we saw yesterday, let's switch to the charts here. It just could not go anywhere. Yesterday, the expectation on the Trader Bite, the expectation was for the market to be responsive, chop around, if anything, push to 43, and then find a bid and start working itself up to the 60.75. So we couldn't get anywhere near that. It's just we had somewhat of a drive on the open. It was not quite an open drive. It wasn't very aggressive. It seemed like yesterday there was business to be done right at the open, and then the OTF just backed off. The OTF being the higher time frame, the drivers, the real movers of the market. It just hands off, and you could see that the profile is a somewhat of a B-shaped profile, and the market was just completely imbalanced yesterday. The most traded price is inside of the prior day's value area. That's a signal for balance. Yesterday's value is inside of the prior day's value. Another signal for balance. Just overall, nothing accomplished yesterday. It just basically fell right back in. It's an ORR open. Can argue for open auction in range as well, but there was a pretty significant drive down. You could see it covered 10 points right at the open. It covered 10 points without a single six-tick rotation up. Then we finally got a six-tick rotation up, and then it rotated, and then more than a six-tick rotation up, which was actually 3.25 points, and then it continued again with an 8-point push. So overall, just not much to say there. For a 4-tick Renko, not many bars were formed for a 4-tick Renko. If I did not change the time scale and shifted back in time, you can see that a 4-tick Renko on Friday as well as yesterday fills up the screen, whereas in prior days the volatility was such that I would have to squish these bars to see. So you can see this day, you can see the relative Uh, just as a rule of thumb or a measure, you can see that the whole day is that wide. These bars are all the same scale. And then Friday is even wider, but still pretty slim. Whereas Thursday, we don't even see the beginning of the day. Um, Thursday's day had many, many more bars. So you could see that this is fairly wide. This is getting thinner, and this is really compressed here. It's just this is one of the reasons I use Renko, is just to get a rough measure of the movement, the opportunity in the market, and you can see that it's just compressing, and it'll probably continue to do so through Thursday. Again, a huge. Here's Thursday, last Thursday, the last really volatile day. Here's Friday, and then here's yesterday, and you could see the width of these is just consolidating or compressing, and that just gives you an idea of where we are. But overall, nothing to say here. Nothing was accomplished yesterday. We did negate the rally on the Friday close, which is an incomplete rally, incomplete price discovery. We did close the closing price. We did touch the closing price from last Friday. We did close the point of control, and overall, we just didn't accomplish anything else. The overnight low is in line with this closing swing low from last Friday. But again, when I pull up the overnight here, you'll see that not much was accomplished either. And unfortunately, I think that's the theme for today. Not much is likely to be accomplished today either. It's probably going to be a fairly quiet day. So yes, last night on the open, we drifted up with the Asian markets, and then we fell with the European Open. Sat sideways for a lot of the session, and then we finally started to regain, and we just pushed new highs in the overnight session to basically attack yesterday's high at 52.50. But overall, it's fairly muted. You can see the overnight profile is concentrated in the middle. It's almost a balanced profile. It's got a little nub. It's almost a double distribution here because of the volume that took place near the low here with the European session. But overall, nothing to take away from the overnight session as far as an edge, which brings me to what we're expecting for today. Overall, we are still in balance. We're still trading in this sideways zone that was created right after the drop. We've been sideways since the 27th. If I incorporate yesterday, we moved the point of control down to this 39.75, which is basically where where yesterday's close was, and yesterday's point of control. So you can see the point of control of yesterday is in line with the composite point of control. Again, balance. Short-term traders in control yesterday after the open. Not much going on, and I expect it to continue through today. The only thing that leads me to believe that we might get something today is that we did have some pretty good compression yesterday, but the volume overall was very low. 776,000 contracts traded in the day session yesterday, much lower than the million normally expected, and much lower than the 1.26 million we've had over the last few days. So if you do a composite profile of volume over the last couple of weeks, it comes out to about 1.26 million contracts per day. We're much lower. We're half a million contracts short, and part of that is, of course, rollover, but also a lot of the volumes occurring in the December contract already, and generally volume rises around the rollover and expiration period as people who are buy-in holders or sell-in holders, people with open interest, have to move their position, and that action gets counted. That action gets counted in the volume. Yet we're seeing a drop. So this is the theme For now, it's likely to continue. This FOMC meeting is a really important one. There's been a lot of arguing back and forth, and the consensus is right now is that the Fed is not going to do anything, and that's what I expect as well. So when I include yesterday's action in the short term microcomp, you'll see that there's a pretty decent floor underneath today's action. So what I'm looking for this morning, hypo 1. The expectation is we open right where we are here. We get responsive again back towards the MC point of control. This black line is the microcomposite point of control. This pink line is yesterday's point of control. I expect that to be a magnet. I expect this to fall here, chop around. If it does have any buying in it, it'll rise from here, but it's most likely not going to do that. It's most likely going to continue to consolidate. So you can see there's a triangle forming here, and we're consolidating enough to break out. Maybe today is the day, but I'm not expecting too much today. That's hypo 1. Hypo 1 is for it to be a muted responsive response back to the point of control, and then potentially a continuation move higher to attack the 55. I think 60 is very optimistic at this point, given the compression in the range. If not, hypo 2, again, responsive selling, chop, 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 and then an attempt lower out of this triangle to start tackling the levels below, namely 2750 and then 20 even. But I'm not expecting too much. I'm watching. But I'm not very active these days. I'm just waiting for this FOMC. There's just no point. Just think of it from an institutional perspective. There's just no point in pushing new positions or taking positions ahead of the FOMC, knowing that Friday, the next day, is options expiration as well as futures expiration. It's quad witching. So there's too big a gap in information for anybody to put a lot of risk on or to take a lot of risk off. There's just not much to do right now. So you need to be in that mindset of I'll only press the positions that give me a really high probability. You should know what those are. And then otherwise I'm just sitting on my hands, but I'm still present. It doesn't mean you should go out and just go shopping or whatever. You still need to follow the story and know what the action is, because we don't know when this thing's going to break out again. It's consolidating. We do have a triangle shaping up here, so it's compressing and it's likely to do one thing or another. It's just a matter of time. That's all I have for you, though. I'll leave you with that thought. I'll catch you tomorrow morning, and probably more of the same until Thursday. Thursday is likely to be a very volatile day. Just prepare yourself for that. Keep your gunpowder dry and prepare for that battle. Good luck today, and catch you tomorrow. Take care.